Hello and welcome to this very special interview. Joining me today is Siddharth Agarwal, who is the founder and managing director of Mobicule Technologies. And before I talk a little about him, let me tell you why we are doing this interview today. This is about debt collection. It's a startup that has completed 15 years. And the whole intention has been to make the whole process of debt collection a word that scares most of us. How do you use technology to make the process simpler, to make it less intrusive on people, and certainly eliminate any arm twisting or muscle flexing? That's the problem that Siddharth and his team have been seeking to solve for 15 years now and have made a lot of progress. So let's discuss that with him. Thank you very much, Siddharth, and congratulations on completing 15 years.
Thank you very much.
I was just seeing a video of you looking very young when you started, like all of us, I guess. 15 years is a long time, isn't it?
It's a long time.
Yeah. I remember during my reporting years, I wrote and did a lot of shows around debt recovery. And the trouble was that people view it as something which is about going and threatening people and recovering money.
Correct.
I know that's not the intention of the industry.
Correct.
But eventually it ends up being like that. Of course, the regulator, RBI and TRAI have all come out with lots of guidelines. But let me start with asking you, how have you sought to solve this problem?
So, see, this is a very interesting space at the onset. And as you rightly pointed out, because there is a lot of manual or physical intervention and a lot of this thing that surrounds the intimidation or customers or consumers being scared of, recovery agents or collection agents, it's necessarily not banks' employees, right? Banks or NBFCs engage with authorized agencies. Okay, there is a proper guideline by RBI. They have to be, registered. They have to go through a course. There are etiquettes that have to be followed. So it is not just an open field. It is well regulated, and I think banks and NBFCs took some time to probably streamline this, and that's exactly where we come in. So we help them with our platform to ensure that the entire process is compliant, okay, and they have the regulatory checks and balances, along with building efficiency and optimization for the entire process. Okay, so this has been a very interesting journey for us. While we've been in business for 15 years, the last 10 years we are focused and just working on solving this problem in the industry. We see a huge gap. Not just to completely change the way consumer perceives it. We want to make it customer centric. At this moment, debt collection is more of go and get the money. We want it to look more beautiful, less intimidating, and we don't want the consumer to be stressed when he is probably getting this call. And we are doing this effectively by combining processes, technology, getting all the stakeholders on a single platform, and with proper monitoring and regulation being followed. So I think to begin with, so
you're
where we have started.
Technology company,
correct,
basically.
Correct.
And how are you using or have used, and of course technology keeps evolving.
Correct.
And I think now we are talking of artificial intelligence. Do you see technology being the driving force behind, and what have you done to use technology to effectively, see, as a lender or as a telecom provider or a utility provider, of course, if I've given a service, I want my money back.
Absolutely.
At the same time, there will always be certain consumers who may want to misuse the system, but there will be a lot of genuine
Correct.
Consumers
Correct.
may be facing some difficulty.
Correct.
So how are you using technology to sift the good from the bad?
So see, as you rightly pointed out, it is not that everybody wants to default, right? There is a variety of consumers that are there. Some simply forget, right? They don't remember the dates, or the process is not convenient. They are having a auto debit on a certain account, but the money comes into certain other account. So there are a lot of these consumer challenges that are there. There is a second type of a customer which is probably little bit stressed on his cash flow. It could be an employee getting his delayed salary. It could be a self-employed person getting delayed payments from his customers. So they are not defaulters. They are just late payers, I would put it that way. Then there is the hard customer or the defaulter. I wouldn't call them a genuine defaulter. Sometimes it is driven by some past, some background which they may have. They may have faced losses and things like that. And then there are people who want to obviously misuse the system, right? Take the money and not return it back. So we've ensured that we develop a platform which caters to all of these. The bulk of the customers fall in the first and second category, which is they don't really want to default, right? They've taken the money, they want to pay back, because now with credit rating agencies, your credit score gets impacted. So it's not that you can, hide from the system. If you have not paid one bank, you cannot get a loan from anybody in the industry. So we've ensured that we put the customer at the center of it. The bank, NBFC, or any financial institution, or a energy company or a telecom company which needs to get this money back also has its own challenges, right? It's a disparate process. Core banking systems, the way they were envisaged, never thought about this problem. See, this, I call it as the tail of the problem, right? So it is like you lend, you first acquire a customer, you engage with him, you want to lend to him, and once you have lent to him, you want to ensure that you have got your capital back. Now, this last part has largely remained, not in focus so far. Post-COVID, things have changed in a big way because we had no choice. We had to sit at home and recover the money. So technology had to come, and that's where we also started moving very fast. And technology has evolved, right? From a time where you wanted to, where you would send reminders over email, over bulk emails, and you would treat it as spam, to the point where we have brought it that we actually engage with the customer at the forefront. It's very easy to make payments these days, though I understand the risk of some fraud happening while you're clicking on links, but largely it is very convenient to pay, and the advent of UPI. So this has completely changed the landscape. So if I look at the technology landscape, at a very early stage, our intent in the platform is to reach to the customer digitally. Okay, you may be surprised, even the rural customer is comfortable now. They all have a UPI app through which they can pay, right? Whether it is Bheem or any private player app, they are able to now use and pay. So we want to bring everybody inside the ecosystem. You have a EMI, you are reminded. Okay, if you have missed the EMI, we make it very convenient. Nobody will call you. Nobody will bother you. You can just click on the link and pay. And if you have still not paid, you are delayed, we first make effective use of technology. So IVRs and voice bots, which is digitally reaching out to the customer. Obviously, when you are talking to a human voice, or there is a human at the back end, you have a natural stress. Okay, boss, recovery hone wala hai, and things like that. When you are talking to a bot or a digital bot, at least that fear is gone, because now you are talking to a machine. And all you have to do is, see, all the bank or the financial institution needs to know is, if you are going to pay, when are you going to pay? Okay, and if you have intent of not to pay, inform us. We'll work out a better solution. We'll either settle, or we figure out some way to correct this situation. So all the bank needs, or the financial institution needs, is a feedback from the customer, either the payment or a feedback. Okay, what do you want to do next? And with all this intimidation, people try to avoid either the collection agent or the calls that come from the contact center. So what we do is at an early stage, we digitally reach out to the customer, give him the convenience of paying at his convenient time through his convenient platform, whether it is SMS, email, WhatsApp, IVR, voice bot, a link by UPI. He can choose at his convenience to pay through the platform of his choice. Okay, so we use a cliche over here: right customer, right platform at the right time. Okay, so we even monitor the customer's behavior more from when it is convenient for him to pay. Next time, we will only bother him at that particular time by sending the reminder. I mentioned bother because we do based on the risk profiling. This is where we effectively use technology. So we use AI to come up with risk profiles. So based on a consumer's past patterns, behaviors, his credit scores, his demographics, we come up with a risk profiling and we remind the customer. So a high risk customer obviously is reminded more than a low risk customer who's going to naturally pay. So obviously we give this technology platform to the bank. On behalf of the bank, the platform or us would reach out to the customer. So it's always, and it is well regulated, secured, no data moves out, all those checks and balances. There is no choice now. It is, very highly regulated, RBI mandates a lot of these things. So we come under all those mandates that are required.
Sure. You talked about, credit score, which is such an important aspect. And yet, not too many people know about it. Because we live in this buy now, pay later generation, right?
Correct.
Where maybe your first loan is a personal loan because you've gone to buy something.
Absolutely.
And at some point, you might need to get a home loan.
Correct.
And unfortunately, if you don't pay now, you will spoil your chances of when you actually need a home and a home loan. Do you believe that on this and other aspects, the industry can do more to make people aware about these things? I don't know how many people even know that a credit score, apart from the metro cities, of course, and, larger towns.
I'll attack it in a different way. I look at it in that there are 2 or 3 different types of profiles again here, right? The buy now, pay later is the, with the generation X or whatever you call millennials or whatever that data keep coining terms. So, that's a generation which is in the buy now, pay later. If somebody wants an iPhone, they want it right now, right? So they will buy it and they want to obviously pay later in EMIs. I don't think this generation doesn't understand credit score because they are all would have educated parents who would be working with, large banks and large NBFCs themselves or large corporates in this. So they do educate their children on this. So I don't see a problem on there with these. The problem lies in the rural, right? The rural India, which doesn't understand or has not been explained properly about this entire, lot of the credit scoring, because until you take your first loan, actually you are not part of this, credit scoring. A lot of people don't have a credit score. There are a huge number of people who still do not have a credit score. They may have taken. So these are farmers, these are people who buy tractors, who take crop loans, who take small fishery loans. These are the people who do not understand this entire credit landscape and the credit rating landscape. So definitely an effort has to be made to bring them under the credit landscape. And second, educating them that if you miss your EMI, there is some, somebody at the back, कोई खाता बुक मेंटेन हो रहा है which is going to keep a track कि आपने आज पे नहीं किया कल आपको when you go for a loan this is going to count and you will get a higher interest rate. So the whole intent of it is not that you default and you don't get money next time. It becomes more and more expensive because next time you go to a bank and you have defaulted on your previous loans but you did pay it, your interest rate because your risk profile is higher. So the banks charge you a better or a higher interest rate because they want to cover their risk in case you default again. So there is definitely a need to educate. But again, I think we are in middle of a revolution. One thing that is changing this, I am not very sure how much of it goes to the credit rating agency, is an industry called microfinance. Right? It has reached the nook corner of India. And it's a very rapidly growing industry where these are small loans, right? You and me are sitting here, probably 10,000 is a very small, but there are people who require that 10,000 also. This could be a street vendor. This could be somebody who is making a broom and he needs that loan to service his customers. So there is a good amount of, even for a personal loan segment, there is a good amount of micro lending. So this is bringing the lower pyramid, which is a larger base of people within the credit rating. And there I definitely buy your point. There is a lot of effort that needs to go into educating these people that it is not just that apne you took the money, you have to pay it on time because it is going to impact you in the future. So tomorrow if you want to do, there is a huge, you mentioned home loan. So there is a scheme which enables houses for this. There is a PMAY scheme which allows them to buy homes which are low cost homes, subsidized homes at subsidized rates. So they will need that. So they need to be educated that it is very important not just to pay, but pay on time. See, they don't default. What I have seen, microfinance, in fact, is one of the least defaulting industries. There may be delays, but the default rates are lower. So they just need to be educated. There are self-help groups. I can go on and on, right? It's a very, very evolving in a complex ecosystem that is coming.
And that is, as you said, a revolution coming as we bring Bharat into the fold, as we keep saying. Which segment do you see the maximum default, Siddharth? Is it credit cards? Is it, which was traditionally the most? You now also look at, telecom bills. And again, there we find people taking, prepaid and then just chucking it off. Or, utilities as, more and more infrastructure is becoming private. There are utility bills. I mean, in a government-owned regime, I didn't even probably realize how much is
people never used to pay. Actually,
So, but now obviously, if it's a private enterprise, it is answerable to its shareholders.
Right. See, utilities and your telecom has the string in their hand, right? If you do not pay, they can cut the string, which means they can cut your internet connection, they can stop your prepaid card, your electricity or your gas connection can be disconnected. Though, let me tell you, it is not an option which any of these companies want to take, because it is more expensive to do that than actually recover money from these customers, right? So they do have a string in hand which they can use to ensure that the customer pays. The problem comes in the financial industry. If it is, so you asked me which is the highest segment. So if you broadly divide the way loans are, there is an unsecured loan and there is a secured loan. You have to just break it down. So unsecured loans and all these personal loans and these fancy loans that have come in, I call it fancy, probably there is a generation gap, which is buy now, pay later. There is a peer-to-peer that has come.
Yes.
So I have spare money. There is a platform which I can use to lend money to you. So it's called peer-to-peer loan. There are fancy ways in which people are lending. And there is a secured loan, which is your house loan, which is your LAP, which is your car loan, your two-wheeler loan, where there is an asset. Though majority of these cases, which is a vehicle, after 1 year, these loans are actually expensive for the banks if they default. In the first year, it is upsided for the banks and the NBFCs. Later on, becomes a little bit difficult. Maximum defaults are on the unsecured side. Okay, personal loans. Credit card is a huge space. I am not an industry expert to give you the exact numbers, but yeah, if I have to tell you a sense on what we handle and how we do it, what I have realized, the easier it is to give the loan, the more defaults will come, because somewhere the credit process, I wouldn't say compromise, would have been a little bit lenient to ensure that the guy gets it. So if you're buying an iPhone, we expect that you will pay your EMIs because, and again, technology started playing loans. I know one of the the phone providers said, "Maze technology where you buy a phone on EMI, if you don't pay EMI, it locks the phone." Right? It has gone to that level as well. So, which is obviously very extreme, but so this is the segment where the personal loans. Definitely there is a huge corporate segment which is high value loans. The value wise they must be the bigger ones,
number of customers this would be.
Number of customer wise, it is the personal loan, the credit cards, the small ticket loans, these BNPLs, or consumer durable loans as you call them. These are the one which have the maximum defaults. The lowest I have seen is gold loan.
Gold loan.
Okay, because it is simple. If you don't pay your gold loan, you have the bank can auction the gold. It's an easiest asset to sell. That's a portfolio we work.
And it's also very emotional for
It
somebody.
is emotional, right?
I
You
gave
have
you
your
my gold.
you have a necklace.
I want it back.
You want it back. So there, actually, you don't need to do any collection over there. If you just send one message to the customer that your loan is going to be, your gold is going to be auctioned, next day the payment, or next hour you receive the payment. So that's what I understand from the industry. It's a very interesting space. We are doing a lot of work in that space as well. So and it's a up and coming space right now.
Yeah. One final question, Siddharth. Normally, if we look at legally, if I've given you, you've given me money and I haven't paid you, there should be a legal recourse.
Correct.
Right? While for the bigger value loans, the corporate loans,
Correct.
we've had this
You
wonderful
got agency, you got arbitration, you got all these aspects.
right?
Correct.
But the whole reason recovery agents or debt collection in a coercive manner happened because the legal process where if I am a lender, you haven't paid me, I should be able to go and register a complaint against you and recover the money. But a civil dispute in our country can take more than 20 years.
Correct.
And therefore, you can't as a bank or as a lender wait for 20 years and pay the legal fees
Absolutely.
to fight a case like that. And we keep reading every day, right? Some 100 rupees case, 50 years,
Correct.
60 years.
Correct.
So you're more better off just writing it off,
Absolutely.
which doesn't create a good credit culture in the country. But you mentioned earlier about settle. So, just like we find in the corporate side also, there is an arbitration
Yes.
or a settlement where two sides sit at
Correct.
the table and say,
Correct.
okay, fine, let's settle it this way. Is that something that can be done? What are your thoughts?
So, this is where, if you look at our journey, where we kind of evolved the platform, we were purely a collection platform. When we started off, we were purely a collection platform, which means money is due, pay the money. Simple as that. It's called the soft bucket, okay, which is less than 60 days odd kind of a thing. After that comes a hard bucket, which is where the bank is at the risk of this becoming a non-performing asset. Again, there are very tight norms. No bank wants an NPA. Okay, so at a later stage, though it should not create a bad culture, but at a later stage, it is preferable for the bank to settle it rather than go legal. Especially in a unsecured scenario where it is a personal loan or somewhere where there is a house. Even if it's a car or a two-wheeler, because you don't recover the entire value, you end up making a loss on that loan. So there is in this entire gamut of recovery features that we have in our platform, which again brings all the stakeholders together: the customer, the agencies, legal agencies, the bank, and the entire hierarchy of the bank. It's to settle an account is a complex process. Because again, there are norms. I can't just settle anything. If you've given you 100 rupees and if I'm writing off 20, it has to be, because there can be favoritism, there can be a lot of things that happen. I give you a loan and I write it off, right? I am your friend, I'm working in the bank. So there are processes, bank hierarchies that need to approve based on the value and the percentage that you are waiving off. So this all is covered in the platform. We want to make it as convenient that if you are in stress and you want to settle, you just go to a bank portal or you get a link through our digital platform. You just say how much amount you want to settle. And if it is within the bank norms, you will get a auto approval. You pay the amount and finish it. You don't even need to interact. All your letters, your due diligence, your NOCs will all be available on the fly digitally. So this is the level we want to go. Coming to the legal part of it, if it doesn't get resolved that way, the bank simply has no choice. Nobody goes legal for 100 rupees. Let me be telling you, because the cost, our cost would be much higher than, forget the legal agency's cost, our cost of the platform may be higher for them to go legal. But we built a platform which allows you to cater to the various stages in the legal cycle. Again, there are dunning notices, there are loan recall notices, there are a lot of, again, well laid out processes are there, but it is purely manual in most of the banks that we have seen. And you have to track the post, you have to track this, then the customer will contend, I did not get the letter and all that. So we have kind of tried to attack this problem. We have elevated to attack this problem in two ways. One is to bring in technology and platform which integrates the courts, the post, the bank, the customer, so everything is on one platform. Second part, you added legal services, right? So we have tied up our, built a ecosystem where our legal personnel help the bank to handle this entire process, okay, in a defined and a cost manner. See, the bank is always, there is a term that bankers use, loss and cost equilibrium, right? So the bank is always trying to weigh, should I go behind recovering this money or I write it off? Because the cost of recovering cannot be proportionately higher to the amount you are going to. It definitely cannot be higher, but it can't be a high percentage of what you are going to recover. So if you have to recover 100 rupees, maybe you can spend 20, but you can't spend 50 to recover 100, right? It's going to be a challenge, and you can't do that on a scale. So the banks are always looking at maintaining this, entire loss and cost equilibrium, and this is where we make it easier, more efficient, optimized. So we always give them an option that resolve early, keep the customer informed, give the chance for the customer if he wants to settle. Legal is the last thing you want to do. And as you said, our courts are full, right, with a lot of cases and all that. So it takes a huge amount of time. Having said that, there are good enough, taluka and all these district level courts which do settle. It doesn't take 20 years these days. And there is an arbitration process also for the consumers. It isn't restricted to the high value loans. Even a smaller customer, there is an arbitration process. There are RBI appointed arbitrators who arbitrate, and it's finally a settlement, but it's an arbitrated settlement. One way of settling is you cannot pay. You went to the bank and you said, boss, I want to settle. 100 रुपया है, आपका चार्जेस इतना है, इंटरेस्ट इतना है, just allow me to pay this much and get free of this, okay? The second way, an arbitrator intervenes because the amount is not getting tallied. You want to pay 85, he wants to recover 100, right? So there has to be an arbitrator who says, no, okay, this makes sense. You are overcharging at this point. The situation is not such and all that. And that's the arbitration process. So you do have that for smaller ticket loans as well.
Absolute pleasure talking to you, Siddharth. I wish you all the very best.
Thank
15 years of great work and maybe many, many more years. And you be an important part of this revolution.
Sure. Thank you very much.